You can't be an influencer without one these days.
No. So maybe that's your problem, is you're out of style.
Maybe.
In any event, this just in, mortgage demand is now down 50% from pre-pandemic levels and is at its lowest since 1994. Before you were born?
No.
Oh, just close to it.
Close.
Yeah. From its peak in 2021, mortgage demand is down negative 64%, about 64%.
Approximately 64%.
Yeah, I don't like little tilde in front of things. It always confuses me, but whatever. Approximately 64%. Current mortgage demand is approximately 75% below the 2005 peak. The most incredible part about all this, you might ask? Mortgage rates are still only at their historical average.
That is wild.
That is wild.
What is it going to take in order for it to go above that?
Well, if you go back to housing affordability being so wildly out of control, it's because not only are mortgage rates higher than they had been historically, but we allowed home prices to creep up so dramatically in this period of artificial interest rate deflation that now when you get to historical average, even though the average rate is not anything like, 10% on mortgage rates or 12%, which would be higher than historical average, obviously, you still have a massive affordability issue because that's how disconnected home values are to the market.
Yeah, and just to reiterate what we've said previously on episodes, the disparity between affordability and what people can buy right now. So, the home price to median income back in the 1980s was only 3.5 times, right? Someone's income now, 6 times.
Yeah. And Arun, if you could be so kind as to pull up the mortgage applications to buy a home chart, which while he's figuring that out, I will point out that this bad boy right here, if for those of you who are listening on a streaming platform, let's see, it starts off going, 45 degrees up until about the Great Recession. So I'll call it 2006, 2007.
Yeah.
Starts to go all the way back down. And then you get 2010, 2012, 2014. It's about level. Then it spikes back up almost as high as it was during the period leading up to the Great Recession. And now it's spiking back down almost at levels that it was at leading into what was in the Great Recession. So I look at this as a great indication of the trauma that's going on, but delayed to report to all the reporting agencies in the housing market. I think the lagging indicators that are housing and values are starting to trickle in now. Mortgage applications, I would call kind of an early warning sign or a lead indicator, if you will, of what will ultimately be home values. And I'm already starting to see a pretty significant pivot in home values, although it's slight, but I'm seeing it on average across the country.
Right. I mean, I think what this also really tells possibly is that this is an indicator that, people were buying homes up until now. Maybe now people are really starting to realize that we've reached this peak level. So we can hold, because it's going to start coming down from here, right? To your point earlier, last week, interest rates on a 30-year fixed mortgage were 7.9%, right? Now, as of today of this recording, they were at 7.38%. Now, obviously still significantly higher, but historical averages.
That's a pretty big swing.
But yeah, exactly. Half a percentage point for it to come down. To put things into perspective, if you were to put 20% down on a home purchase of $400,000, that equates to a difference in payment of $119 a month.
Yeah.
Not enough to really help you fix the affordability issue, but still, nonetheless.
That really only impacts people that are on the fringe buyers, if you will. I look at all this stuff and I think to myself, okay, well, you know what? At least the data is pivoting the right way.
Correct.
Even, jobs.
I think that's going to be
hiring.
the theme of this show. That
Really?
the data is really starting to pivot in the right direction, because if we remember, the way you really got to look at it is good news is unfortunately bad news for the Fed, and bad news for consumers out there and everyone in the economy is really good